How's it going, everyone? We have seen some major downward moves in Bitcoin and crypto markets over the past 24 hours, as I highlighted as a possibility in yesterday's video. So in today's video, I want to cover the latest price action, do some technical analysis in the cryptocurrency space, look at some charts, patterns, and indicators, and also take a look at the latest news we have developing in this space. So welcome back to the channel, everyone. Phil here from Money Authority. Be sure to hit that subscribe button for daily videos on crypto, stocks, and more. And also be sure to click that little bell right next to it so you never miss out on the latest news and analysis in the world of crypto, stocks, and finance in general. And before we get into anything, I just want to wish you a Merry Christmas and Happy Holidays. I hope you have a lovely day. So starting off with our usual look at CoinMarketCap, you'll see that we have definitely seen some major downward moves over the past 24 hours. Bitcoin is down nearly 10%, XRP 12%, Ethereum 13%, Bitcoin Cash 24%. So just some major red numbers as I scroll down this list of the top 100 cryptocurrencies. And again, as I called out in yesterday's video, it was looking like we had some patterns and indicators telling us that a potential drop was coming. So we'll dive into some more technical analysis in a bit. But first, I also want to take a look at the total market capitalization that we're seeing right now across the cryptocurrency markets. So you'll notice that pretty much overnight, we dropped from somewhere around 146 billion US dollars in total market capitalization all the way down to about $128 billion in total market cap. So we're pretty much right back to levels that we saw a few days ago around the 22nd of December. But with that covered, let me jump over to the Bitcoin charts. And as always, ladies and gentlemen, I look at Bitcoin because where Bitcoin goes, the alts do tend to follow. So let's dive right into the technical analysis, starting off with some support and resistance levels that I'm looking at. So we're here on the 4-hour chart, and you'll notice that what happened within the past day or so is we tested a resistance level right around $42 to $4,300, and we saw a clear rejection downwards here. If you've watched any of my videos over the past couple of days, you've probably heard me say something along the lines of that if we broke up and over $42 to $4,300, that I saw a clear path for us getting to around $52 to $5,500. And the reason I believe that to be the case is because if you look at Bitcoin's history over the past month or so, we didn't really have any strong support or resistance in between $4,300 and $5,200. We have a little bit in the $43 to $4,600 range, but nothing too significant. Again, I think our next major level is somewhere around $55 to $5,700. So we saw a clear rejection down off of $4,300 after we did confirm a particularly bearish looking pattern. More on that in a bit, but you'll see that we're now hovering somewhere around $3,700 to $3,800 US dollars, right in line with support and resistance levels that we had been looking at over the past month or so. Now we're currently hovering around some decent support. So now the big question becomes, are we going to hold here and potentially bounce up and resume this rally now that we've kind of reset a couple of technical indicators, or is this dump down the start of something more significant? Well, to better answer that question, let's see if we can take a look at and identify some patterns that are potentially playing out on the Bitcoin charts right now. So yesterday I was talking about a rising wedge pattern, which is actually a bearish pattern. So we did actually see that confirm. So we saw one bearish pattern confirm, but do we have anything developing right now that is potentially pointing to bearish or bullish movement? Well, if we zoom in on the 2-hour chart, you could potentially call this latest move down a bear flag in development. However, in my eyes, it's a bit early to really call this anything just yet. We obviously have the long candles downward to the left acting as the flagpole here. However, we'll have to see what happens in this potential consolidation range to really call this a bear flag. On the flip side, zooming back out to our daily chart, we still do have one potentially major bullish pattern developing here. I've talked about this a couple times in the past few videos, but I'll go over it again just in case you missed it. So we potentially have what's known as a inverse head and shoulders pattern forming on the charts. And again, this is a very bullish reversal pattern that you see towards the end of extended downtrends. So we obviously have seen an extended downtrend that started around the middle of November. And essentially what this pattern looks like is a series of valleys or troghs, with the middle trough being the deepest. So you'll have the left shoulder, the head, and then you'll have the right shoulder right here. You want to see the price action match up with another valley right here. So we're definitely seeing this pattern potentially set itself up here. There are two things we need to see to confirm this bullish reversal pattern though. The first thing we need to see is the price action give us that third and final trough or valley. And the final thing we need to see is the price obviously break out above what is called the neckline. So the neckline is pretty much where this pattern hits resistance, and essentially you want to see the price break out above and over that neckline with high volume. So obviously we'll see what happens over the next couple of days, but a lot of people in the crypto space have been covering this pattern, so it will be interesting to see if this confirms or not. And I will mention again that if we get above and over this neckline, going back to those support and resistance levels again, I mentioned that $4,300 was a significant resistance level for Bitcoin. So if we see the price get above and over $4,300 or right around this neckline, then I do think we can get up into the $5,000 range fairly easily, because we do not have much support or resistance between $4,300 and $5,200 to $5,500 on the charts. Moving on to some technical indicators. So you'll notice that our RSI, which is this middle technical indicator right here, has dropped pretty far from being anywhere close to overbought in the past 24 hours. We're actually much closer to being in those oversold levels. And again, when you get into those overbought or those oversold levels, you can usually expect some sort of price bounce back in the opposite direction. However, right now, if this current downtrend continues, we're still not really in those oversold levels, so don't expect a price bounce back up just yet. However, this being the 4-hour chart, these conditions can change pretty rapidly. Meanwhile, I would also like to point out that with our MACD indicator, we did get a sell signal with this bearish crossover on the 4-hour chart as well. And this happened shortly after our sell-off began last night. So remember, with this MACD, one of the potential ways you can use this technical indicator is to see this blue MACD line cross the orange signal line. So when it crosses above and over that signal line, that is considered a buy signal. When it crosses underneath that orange signal line, it is considered a sell signal. So this is actually a perfect example of when you could have used this technical indicator to nail a trade and make some money in this space. This pretty much lined up with a sweet shorting opportunity or selling opportunity right here. And conversely, we have also seen bullish crossovers on this MACD line up with great buying opportunities as well. So this is definitely a powerful tool that you can add to your arsenal if you are a trader or you're looking to get into trading in this space. Zooming out to the daily chart, we're not really seeing anything too compelling with our RSI or the MACD. The RSI is pretty much holding directly in between oversold and overbought. Meanwhile, our MACD is not giving us anything close to a crossover. However, we are seeing the MACD line slowly converge towards the signal line, but we're still pretty far from anything just yet. So with all that said, let me cover some short to midterm price targets that I'm looking at. So if we see this downtrend continue in the near future, based on Bitcoin's price history in the past, I do think we have a bit of support right around $3,400 to $3,500. If we do manage to breach this level, then I also think we have some around $3,300. And then finally, we have our all-time low in 2018, which is around $3,100. And I've said this before and I'll say it again, but if we do breach that $3,100 level, then I think we are going to see a giant final capitulation wick down, which essentially establishes the bottom in this Bitcoin and crypto bear market. On the flip side, if we see some sort of bounce here or bounce off of one of these support levels I identified, and we go ahead and confirm that inverse head and shoulders pattern with a breakout up to $5,200 to $5,500, well, that would be a significant percent increase from where that rally began. That would put us around somewhere close to 80% up from the bottom. And I've said this before, but I do think that seeing that sort of price gain up would essentially be strong evidence in favor of this price being the bottom of the Bitcoin and crypto bear market in 2018. I made a couple of videos dedicated to what a bottom in this bear market would look like, but essentially to recap what I think a bottom in a bear market should look like, I think it should have a strong V-shaped bounce up with a massive percentage increase upwards from that bottom, strong volume, and of course to start with, you need that massive kind of capitulation drop down. So right now you could definitely make that argument that we saw that strong kind of capitulation drop down. However, what we are missing is that strong massive percentage rally back up. We're sort of halfway there, and while we have seen much stronger volume lately, especially compared to what we saw from September to November, I would ideally like to see much bigger buying volume similar to what we saw when this downtrend began. So we'll see if that inverse head and shoulder pattern confirms sometime tomorrow and bulls wake up to a massive Bitcoin rally underneath the Christmas tree. But really quickly before I end this video, I also want to cover what's been going on with the stock market lately. So you may have heard that the three major stock indexes, the Dow Jones Industrial Average, the S&P 500, and the NASDAQ Composite, have been hit particularly hard on Christmas Eve. So at this point, you can kind of clearly see that the drops that we've been seeing in the past couple of weeks are pretty much the biggest we have seen since the global recession back in 2008. If you go by the general consensus in the financial communities, it is considered a bear market when stocks and indexes are down more than 20% in a given time span. So looking at the Dow Jones Industrial Average, you'll see that we're pretty much just shy of that 20% mark. On the S&P 500, we've actually hit that number just barely, and on the NASDAQ Composite, we are well into bear market territory. So yes, while stocks are looking kind of dismal right now, there are a couple caveats that I do want to mention here. So number one, remember that the stock markets and their performance are not necessarily always tied to the performance of the economy at large. I would like to stress stress that overall the numbers that we're seeing in the global economy are for the most part pretty fundamentally strong right now. In the US especially, unemployment numbers are extremely low, GDP is up, wage growth is up, and so forth. So if the economic numbers are strong, what is contributing to this downtrend? Well, number one, you have to remember that we are looking at one of the biggest bull runs in stock history since 2008. Pretty much since the last recession ended, we have been in one of the biggest bull runs that we've ever experienced in the financial markets. So keeping that in mind, it sort of makes sense that we are due for some sort of correction or pullback at some point. You can't just expect things to go straight up forever and ever. There will be pullbacks. But on top of that, you have to remember that markets can always act irrationally, and we definitely have some things happening in the news that can contribute to panicky behavior and irrational behavior in these markets. For one, we have the potential trade war brewing with China. That has definitely been contributing to fears. We also have the news of the Fed continuing to raise interest rates, and that is contributing to fears of slowed down growth and earnings for these companies. And to top it all off, like the cherry on top of the sundae, we have the government shutdown in the US, which is just kind of contributing to the overall FUD, the fear, uncertainty, and doubt. So while this is the biggest move down that we have seen in quite a while, it does appear that many are still optimistic about the growth that stocks could experience in 2019 and potentially after that as well. So with all that said, what do you think? Do you think we're entering a long-term bear market and potentially a recession, or do you think that this is just a natural correction that needed to happen before stocks could kind of resume their upward trajectory? Let me know in the comments down below. So that is it for this video, guys. If you enjoyed this one, please consider subscribing. I do crypto videos like this daily, and your support really helps small channels like this one grow. I also highly recommend joining our free Facebook group. It's for crypto enthusiasts just like yourself. Also, if you want to learn the crypto strategy that passively turned $5,000 into $83,000, check out my passive crypto investing case study. It's completely free. You can find the links to both the free group and the free case study in the description down below. Lastly, guys, this goes without saying, but I'm not a financial advisor. This is not professional investment advice telling you to buy or sell anything. This is just me covering some stuff in the financial space that I find interesting. Always do your own research before spending or investing any of your own money. For all that said, thanks for watching, and I'll see you next time.